The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this October the 3rd, and thank you for being here. My pleasure to do the show, 12 o'clock to 1 o'clock Eastern Time, weekdays, and great programming earlier on. Hopefully we can keep that standing up, and then you go to Steve Rhodes, Dave White. What's today, Tuesday? Oh, today's a full day. Tom O'Brien, and then Andy Hecht. So let's get going. Dow's at all-time highs, up 77 at 22,625. S&P is up at 25.31, also at up 234. Comp index is lagging. It's up 5 at 60, what is that, 65, 2021? Yep. The VIX index is at 958, up only 11 cents. I shouldn't say only up, it's up 11 cents when the general market is up. It's very interesting. Maybe buying a little bit of insurance there. So here's the E-mini, up 2.25 at 25.28. Made a high, all-time high today at 25.95.50. This is leg E. I'm calling it an E. I don't see any reason to give it an alternate count just yet. The MACD's got that M formation, which says this right shoulder should start to fail very soon. And you've got the same right shoulder in the stochastic. And the on-balance volume is very strong, but becoming rather overbought. We were looking at the weekly charts in an E/B. At this particular time, I don't see any reason why I should start fussing whether it's an E or a B. It is above the trend line resistance. It's acting very well. The MACD is cross positive. Stochastics at 93%. That's very good. It is the daily that's going to inform me about any trend reversal. But it is this 120-minute chart with a doji peak E at 25.29.50. Oh, what am I talking about when I talk about these peaks? I'll do that in a short while. But suffice to say that in the Chapman wave, when we get to a D, as you can see here from this low bar, you identify the low bar of importance, merely count each successively higher peak in the weekly chart of the ES mini. Maybe I'll do it on something that most people can look at. A lot of people don't look at the futures. As I move along, I'll do it. So what we're looking at is parameters are very easy. A break today into the 25.31, 25.33 area is really positive. I don't think it's going to happen. I think we're getting a little tired here. Wouldn't be surprised if either by the end of the day or by early tomorrow we are below 25.25. I'd say 25.23 says on the 120-minute chart. Be careful because that's now in a sell mode. This is just a 120-minute chart, and then we'll see how it impacts the weekly. I want to do a bunch of things today. So especially I thought, I'm at the phase now where I love to teach. I haven't given a class for quite a while. I thought, you know what, I'll give some classes just during the day, just while you're here. And if you're really interested in what I do, then perhaps at some point I'll give another one of those intense all-day classes. But in the meantime, let me show you what I'm looking at here. If you look, let me finish the numbers first. So QQQ, let me just wrap that up, then we can get all these things out the way. QQQ is up 25 cents, holding okay, hasn't broken above yesterday's high, and it hasn't broken above 146.59, the all-time double top high. Very interesting that it was a double top. Sometimes a double top becomes a magnet, and we'll talk about that as well. Meantime, this just a sideways move in the weekly chart, leg C in the monthly, and it goes to leg C extension at 146.60, and it fails if the entire month of October doesn't see a new all-time high. Let's go to the New York Stock Exchange, NYA.X. Reason being, it's at all-time high, leg F, calling it an F for now. In the daily, weekly is F/C, and monthly is leg D extension into October. Cannot get the peak D until all of November is completed. So that's 7 weeks or something from here. MACD and stochastic in all time frames is very positive still. Let's see. Let's do these all. Let's go right through them. SMHs made a new high with a little doji candle, a doji candle yesterday, but so far a very small one today. My contention was that we would be looking at doji candles in a number of the indexes today and some weakness tomorrow. We'll see if that happens. Now, in the SMH daily, it's F/C. In the weekly, it's D/C. And the monthly is leg D. So that the Ds are falling into place. You've got to be a little bit careful. But in fact, it's been one of the leading indicators. And so far, this is outstanding action. I like to go to gold. Gold right now is up 0.7 at 1276. Hit the 200-period moving average yesterday, tested it this morning, and now it's in leg D to the downside trough. Leg D, trough D. If tomorrow there's a higher low than 1271, that'll make a D. And then we're going to watch closely to see if we get some trend reversals. Weekly is in a peak D, and this is a serious sell signal, hinting at a sell mode, but let's wait until the week is finished. And the monthly chart is just so. Let me go to copper, high-grade copper, trying to form a base as well, holding off the lows, acting quite well from holding a base standpoint, but not very well from having made a peak E in the daily, peak D in the weekly, and a D potential in the monthly. So this is copper better break above 3.03, I'd say, over the next week and a half, because if it takes out 2.90 support, that's not very good. TLT, that's the bonds. Bonds right now, trying to form a leg D, probably a trough D if tomorrow we get a turnaround. But what's really important about this, the sideways pattern continues in the weekly chart with 122.60s, 200-period moving average support. It's at 124.33, up 5 cents. And 130 breaks out to the upside. So those are your parameters in the larger term. And I'm missing something, crude oil, of course. CL trading, it was trading down a little bit. Yep, down 19 cents at 15.39. Made a peak E daily, a leg C weekly so far, with technicals pretty good. I'm a little surprised at the deepness of the pullback, but that monthly chart says, hey, just in a trading range, bouncing between the 53s and the 48s. Let's see what happens over the coming week or so. I think I've covered just about everything. Now, this is what I wanted to do. Open that up, pull out this chart right here. I wanted to show you something very interesting. It has to do with trends. It has to do with, this is the monthly chart, and it has to do with angles. Now, wait a minute. Did I do the DIA? Is this the chart that I'm looking for? I did them all just a little while back. I said I'm going to, wrong chart. All right, let's pull this chart right out here. I thought that was the one. Wait a minute. Oh, there it is. That's it there. Nope, that's not the one. Oh, no. I'll get it in a second. So, there it is. Is that it? No, data request failed. All right, something's going on here. I thought I had it just right there. Wasn't that the chart I was looking at? So wait a minute, Facebook. Oh, wait a minute. Yes, it is. So here we go. I'm talking about angles. I want to start off with, I wonder if I did the QQQ on, yeah, I did. So you see the QQ NDX 100 power shares. You see this up channel that's formed. You see the resistance. You see this angle. I'll be back straight after this break. Dow's up 72. S&P's up 2.57. We're going to talk about angles. We're going to talk about degrees. The degree as you move higher of a platform, as it moves and then it gets to 90%, that's when you've got to be careful. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Let me just quickly check that. All right. So here we go. So this is what I was looking at here. Let me just go through this quickly, and then I've got a bunch of questions that I will try to get to. Here we go. In between, this is it. Going to get it. Click. There it is. All right. So what I'm looking at here is the SMHs. This is the Van Eck Vector Semiconductor ETF. This is the monthly chart. You see from the low that was made in 2008, and it's fascinating. If you look at historically, if you look at these charts, you'll find very often, twice, over the 10, 12 years or so, the semiconductors have made a low somewhere around October. The general market has made a low in March. It's happened twice now. So in this case, the semiconductors kick off the low back in November of 2008 at a low of 1295. Now, if you go to all the lows that were made subsequent to that, you can even take it to the two lows of the August of 2015 at 43s, and then 45s, I believe, 45s back in February of 2016. That's about a 30-degree angle. I couldn't find, I don't even know how to find a degree on this, so I put in a little asterisk. 30% or 30% rise. And then it goes in acceleration mode at 50. No, that's impossible. Wait a minute, let me just do that again. So this chart that you're looking at, see the black line? The black line is the 9-period exponential moving average, and we've got I thought that was wrong. I thought I'd written as a 70, almost a 70. I'm going to call it a 67 degree. I'd like to be as close as possible. There's a reason for that. So let's call it 67 degrees. I haven't got it exact. I've been asking a friend, and then I asked a trade station ages ago if they would just very easily let me draw in a straight line and then take the end of it and wiggle it and get a percentage. Wouldn't that be easy? Here's the pivot point, and all the rest goes with well, I'll ask them again one of these days if I remember. So I'm just suggesting that somewhere around 67%, maybe 70 degrees. When it goes into a 90 degree, either down like it did there or up, a 90 degree angle, then you've got to be really careful, because the outcome has two outcomes. One is it creates a flag formation, looks like this. So let's go almost like a straight line up. This is like the dreaded H upside down, except there's a difference because it creates some kind of a rectangle, and then it just trades within that rectangle. Then it might pop to the upside, and then it can come down even sharper, or it could create a one-to-one propeller shaft. However, this is the SMHs, right? In this particular instance, we are becoming quite overbought on a monthly basis with no any signals whatsoever other than just the visualization of it. And all I can say is to make it real simple, it's at 94. The trend will completely change in the monthly if it closes any month under 84. All right, so far that's safe. 10 points. It'll take a lot to pull it back 10 points. I can see a very quick 5 to 7 points, but 10 is a lot. Okay, so that's that. Now, if we look at the QQQ, which is not being impacted as much as it should be with the semiconductors doing so well, it's gone into an angle that says mostly I've got a rectangle and I've got the Chapman wave inside track repellent zone, and it's just broken above the red line, hasn't closed yet above it, but it is at the point of most resistance in this area. That doesn't mean to say it can't go high, but it's going to say going high is going to take a lot of effort and probably not that much in points. Now, in terms of angles, you see this angle right here? I'm suggesting to you that that's about 55%. Let me just double check here, get a straight line going up there. This is the primitive way to do it. I just figured it out about 20 minutes ago. Yeah, that's about 58, 60%. Let's call it 60%. So this is not the big trend because it's a shorter term trend, but I am going to put 60 just to show you that we've got to keep an eye on this because we are starting to get into territory that says be somewhat careful because the acceleration phase is unfolding, and then acceleration phase says be careful both in trying to short or trying to go long at this particular point because we're right on the cusp of either breaking up or breaking down. This is on the monthly chart. So I'm just doing monthlies right now. I'm trying to talk angles. So when you start going from a 30 degree to a 45 to a 50 and then a 60 and then a 75 and then going to the 90, that's how each one of the phases, I look at it, I call it, you'll see it in a moment. I hope I've got the chart up here. Somewhere I've got the chart. Let's go to the IBB. IBB has got more of a cup formation that I thought was going to fail. It hasn't yet, but I'm watching it. This is a leg D in the monthly, but this is exactly here at previous resistance is where you want to watch for a right arm, Chapman wave right arm failure pattern. Or I like to call it a right shoulder pattern in this particular instance. So we're watching that. Now, if I go to the, let's see, I want you to do, I did the IYW. This is the Russell iShares US Tech. And you can see we're going into this vertical. I haven't finished this one. So if I draw the trend lines, look at this trend line. And I love the way it almost fits perfectly. Look, you've got that low, you've got that higher low, you've got that much higher low. You've got out of the blue, that's that May collapse, I think back in 2015 was it, whatever it is. You get the smash to the downside, and yet it hits this trend line. It's amazing how it even knew that there was a trend line there. It's like it's human. Okay. Now the next thing I would do is I'd take another trend line and I say, you know what? If I skip all the nonsense, the breakdowns, here's the next. This is the one that I would put in red and say this is a trend line in the IYW, iShares US Tech ETF, and I'll make it thicker so that you can see it. And that's the trend line that I'm really focusing on, and I believe that's at about 45%. Let me just do this. 45%. Oh, it's about 37%, nearly 40%. Hasn't got to 45. And then you get this acceleration here, and this acceleration is the one to watch on a shorter term. Shorter term, I don't know what the shorter term means because it's a monthly chart, because you don't know the speed of any pullback. But what I would say is just make it real simple. If there is a break at 150 right now, up 33 cents, if there's a break of this 9-period exponential moving average of 142, it's probably going to be testing the trend line resistance. And I would say close under 140, 10 points lower, would start to say the monthly is the first time it's being impacted, and you could go back and test the 139 high that was made September of 2000 at 139 round number high. Unbelievable how those round numbers can be so important. So that's what I wanted to talk about. Now, if I'm going to go to the Dow, which I thought I'd done, that's how I thought I'd gotten to the, wrong one, sorry. Right here. So the Dow, let me go to this chart, INDU, has already gone from there to there. It's not the greatest trend line because I've only got one test. So what I like to do is to say, you know, I'm going to put that in, but this is the real one. This is the one that has the most number of hits and makes the most sense to me. And it's right there. It's just a little higher. And that says 20,000. Well, it depends when it is. I'll be back. I'll try to finish this chart when we get back, and then I'm going to go to all your calls. But I wanted to show you something about the angle and how important it can become.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Just to briefly go back to this, so the Dow, he has a monthly. So yeah, the Dow is within a couple of trend lines. It's broken above this red trend line that goes all the way back to around about the highs of 2010, rising highs. Most importantly, there's a larger channel, up channel, and it's getting to very strong resistance, which should be at 22,000, between 22,800 and 900 in the monthly. Remember, this is a monthly chart, so it's not talking about tomorrow or the next day. Most importantly, what I want to just show you is that the way that you create a base, a rising or declining base of support, and the angle of the degree accelerates higher, when it starts to get above 75%, and then it goes to even higher than that, that's where you've got to be careful. But the outcome, as I said before, there could be two outcomes. One is just an inverted V, Eiffel Tower straight up, and then as quickly you come down, or you think, oh my God, this is the end of the world, and then all it does is it forms a rectangle pattern, and for a long period of time, it goes sideways. Now, that long period of time could be a 120-minute chart going sideways, or a monthly chart, but that's really those are the two results that I always look for. So in the meantime, the Dow, we don't know if there's a new accelerated move going on in the Dow right now. It's got the feeling, everything about it says, you know what, against the backdrop of all sorts of things, the Dow is absolutely determined to go higher. There's a chance, but I like it to be much longer. I like it to be hit a few times, the trend line, and I really do. I know what this is not a short-term vehicle at all. This is where you want to look at the longer term. So that says this line probably can last another month or two, and the level to watch in the Dow is 21,600. That's 1,000 points from here. We could do 1,000 points. We've just done it up. We could do it down. So one of the reasons why all we've done for my subscribers, we have only long positions. Trying to short today, we just missed by 1 penny getting a particular vehicle that would have been very nice. It's up a little bit now. It would have been nice to have gotten because it would have been the exact low of the day. It's fine. I'm looking at it. I'm having patience, not rushing. I think we are getting close to some kind of at least a consolidation. So I wanted to show you angles. Oh, let me get this back again. So the question is, on Alphabet, I call it Google. Google has gone into an acceleration phase, but not the acceleration phase. And that angle right now, I forgot to write it down. Let me just check. I think it was 70-something%. Let me just check. I'm using this very primitive, transparent. There we go. It's about 55%, 60. So this is getting there. So there could be a pullback at 953. 909 is the 9-period monthly support. If you go to Amazon, now this is a little different. Amazon has already gone to 60%. This one here, I don't want to make it green. I'll make it green for now, but this is not the green that I'm looking at. It'll be vertical when it's green. So Amazon's getting rather quite a bit overbought, and you've got the selling season coming up. So this is exactly when it should start to pick up steam. So far, it's not. And what was Facebook is vertical. Facebook hasn't even it's just gone straight into a huge 70-something% incline. So Facebook saying, I'm a leader. I'm really doing well. But that also makes me a little bit more vulnerable. In this case, if it breaks at 170 at any point in the next month or so, if it breaks 157 9-period exponential moving support, you could have a pretty quick pullback to the red line. So I just wanted to go through those and talk about angles. We'll talk about them more. I want you to introduce it as a theme. A lot of people have done much greater work than I have, but this is the way I've always looked at it. It's the angle, the incline, and the speed with which you get in the incline that's really important in my work. Now, let's just go to a couple of things here. Could I look at, I'll go backwards because that's what I'm looking at here. Could I look at Gilead? Gilead is an Israeli sciences, biosciences, I believe, and it's trading at 83. The high, recent high was right there at peak D at just over 86, 86.27. And right now, what we're looking at is it's got a declining trend line, a channel that's going down. It's having a difficult time to break out. It's got a peak C, but this is a gray C in the weekly chart. Gray because it's way underneath the previous high, all-time high of 123, I think it was. Yeah, 123.37 back in June of 2015. It slumps all the way down to the 64s, and look where it is now at 83. It's a nice rally. It had a very quick move to the upside. I think it's consolidating those gains. So what's the question? That angle stuff. We call that the first derivative. Yeah, I understand. Yep, Duffy. Yep, it's the first derivative, etc. I like to look at it purely as itself. It's integral parameters. In other words, I'm not using it as if to say, oh my God, Fibonacci, whatever it is. I'm not using it as if to say, oh my, look at this at 75%. That is second derivative or whatever it is. I'm just saying on this particular chart, how many times, the reason being 4 changes in the percentage to the upside, eventually going over 80%, perhaps to 90%, that's what I look for. So it's used on a pragmatic basis differently, because if I use it for derivatives, this is my own way of thinking of it, I'm using it horizontally, I want to use it diagonally. So that to me is the big difference. I'm not a mathematician, so maybe I'm explaining it all wrong. I'm just saying over the many years that I've done it, that's the way I like to look at it. Only reason why I brought it up now is that this is the period we start to see some really strong parabolic moves to the upside. And Duffy was a design engineer for Hewlett-Packard for 35 years. Then who am I to even mention? Oh, that's right. Basil is good for those MIT students. I've walked through MIT many times, not through the main campus because you need a GPS. You need an MIT degree to be able to go through those through the halls and find the right rooms. So I'm just I'm looking at it as angles. I'm a visualist, so I look at angles. Thank you. But I don't disagree. You're absolutely 100% correct, of course. I'm looking at it with a different context in mind, that's all. All right. So now let's go to, a couple of other things that I want to look at. So Gilead, at this particular point, I would say that it's holding well. And if you're long, just keep holding long. But I would do this. If it breaks under 80, it's at 83 over the next week, I'd be really careful. It doesn't have to go to a D in this retracement failure mode. But if it breaks above the trend line resistance right here, if it goes from 83.11 and even touches 84.90, I think it's going to make that leg D. And that'll be very quickly if it can do that. So, So next question is AG. AG is a question on... Okay, it's almost the same pattern in many ways. It's underneath the previous highest peak of A, B, C. So AG is first majestic silver core. It's held very well considering that it's at 6.94, up 3 cents. Held very well considering what silver's done and what many of the others have done, which are mostly closer to their recent lows. Right here, look at that. It's got a wedge formation. I love these wedge formations, only that whenever I look at it, I think of all the textbooks that say if you break to the upside, you can go all the way to the previous highest peak. And if you break to the downside, you can go all the way down. I don't see that at all, so I'll explain what I'm looking at in AG. This is First Majestic, Silver Core, and Basil Chapman, Tiger Technicians Hour. We will be right back, and I'll check all the questions that have come.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So let me just quickly talk to AG, which is trading at $6.97. That's for Sandip. So Sandip, this is what I'm looking at. If you are holding it, I don't think you said whether you are holding. You just wanted me to look at it. Let me just double check here. Basil, what do you think about AG for a long? Oh, you want to get into it? You know, this is holding really well. I don't think at this point, I'm not sure at 696 it has more than about $6.50 downside risk. But at the same time, I don't think it has very much more than $7.20 to the upside, maybe a little bit more. I think it's in a chop, chop, chop sideways move, holding very well. What I am going to say is that if gold, this is a very important week because I'm getting trough Ds, potential trough Ds in gold. I'm getting a trough D potential in the TLT. I'm getting a TBT. It hasn't made it, but if the TB has just one quick spike to 36.03 to start a leg D, that's going to be positive, but then it should turn around and have a little bit of a digestion. So if silver, which is trading at 16.55, holding a little bit better than gold, actually rallies to 16.87, I think that's when AG is going to move. So all I'm going to say is, I'm not sure I'd even want to say to you, just start a little position here because I just don't think it's going to break out yet. I mean, the dollar, I didn't do the dollar. I forgot about that. Dollar's just making a leg D at 93.52. We've been long the dollar since the exact low at on the 8th of September. That was the day we went long the UUP. I don't think it's going to be a massive trade, but I've just wanted it as a trend trade, and that's really what it is. So this is going to be very important. If the dollar breaks under 93, it's at 93.52, closes under 93. Gold could have a little bit of more than a pop. It could have a rally above 1290, which is the 9-period moving average. So I'm going to say if you're looking at a little bit longer, more longer term, and sometimes I know you do, then I would say start a small position right here, and you're going to get a real good feel over the next 3 to 5 trading days, whether it's participating in any rally, whether it fails to, or if it's just stuck, or if it breaks down. But I wouldn't have more than at 9, whatever I said. What is it, 6.98? I wouldn't have more. For a small starter position, I'd have to have a stop initially under yesterday's low of 677. And that's a little too tight. Make it 650. A 40-cent to 45-cent stop on a small position. Get a feel for it. Let's talk again in a few days and see what's happening. So that's that. Then the next question, that was a very good question from Paul. Oh, there it is. Paul GM, what does he say? General Motors. He says, the story of General Motors is looking very compelling. 20 new cars, half electric, China going to all electric cars, huge market here. Let me tell you something. The outlook for the future, I really don't want to go into it now. I don't have time. But the periods of the 1780s, 1880s, 1980s, going into the beginning 20 years of the next century, that's where you get the breakouts. And then after that, you get the developments. And they whittle down from hundreds of companies in that area to just very few. So I think that General Motors, it's the right idea. It's actually doing well on many other fronts. We're long because of the chart formations, but I think it's doing very, very well. A lot of what you say, what you read about, is just not going to happen in the time frames that people are talking about. It just never does. I remember 15 years ago, 13 years ago, when the Toyota Prius came out, and everyone said, "Oh, electric's here to stay." I said, 20 years, 30 years, it'll be 50 years before the infrastructure is set up so that you can go right in and change batteries or plug in or whatever it is in the same time. It should be even shorter than you get gas. And to get that to that point takes a long, long time. Okay, so that's it. Now looking at General Motors, GM, there are two gaps to the upside. It hit 43.70 today in leg E. I think General Motors, I would not be buying it right now. I just put in a bid at 40.20 to 39.70, somewhere around there. If you've missed it completely and you love it, I just think this is at least for me, it's a little too high to just jump in right now. Yes, you could start a tiny position just because you're getting a feel for it, but you know that you want to buy 3 or 4 points lower. That's different. So I'm just saying that, yes, it's done fantastically. I think it's got the Chapman Wave Cup and ladle breakout pattern in the weekly chart. And even in the monthly chart, I'm going to see how this plays out. But in the meantime, what we're going to do is on our trading position, we'll raise the stop. And in the core position, I didn't even want to touch that back in the 34s, and it's at 43 right now. So here we go. So a good point, but I think the concept is right, but I don't think the reality is going to work out. I had a question about the IYT. This is the iShares Transportation ETF, trading at 178.95, up 79 cents. It's doing very nicely. That's not a peak. That's 65.72. Yes, this is like F/B with the, I think it's going to actually go to a G and then turn down. Very strong leg C, and it's at an all-time high in the monthly in the leg E. Transportation is the one reason, one of the many reasons why I said we wanted to go long recently in the Dow and try to stay long as much as we can, as long as we can. And I have to make a decision in the next few days. Do we want to play any short side? Is it worth it? Is there going to be a bigger move to the downside? I have to weigh all the pros and cons. We'll see what we do. Bob wants to know about the HGX. Yep, the HGX is, in fact, doing extremely well in leg E/C with a doji candle today. Also becoming beautiful, beautiful technical work, but it is becoming shorter-term overbought. I'm getting a little cautious right here. No switching positions, but I'm getting close to starting to add some shorts because I think we are rather overbought in some of the sectors. Just on the shorter term basis, the weekly chart's actually just breaking out. I have to even consider this is not an F but a B in the weekly charts. I'm just doing everything one step at a time. I need to know. I don't want to rush to do anything right now. I don't see a need for it. XRT, that's the smaller, less focused. Well, I should say maybe more focused because of the few stocks that it has. This is the Spider Retail Index in leg D, at peak D, holding at just above the 200 simple moving average, 200 period exponential moving average, the 9-period moving average. That says to me there's a magnet and that it could go a little higher, but it's going to come back and test the 4150 to 41 area quite soon. And the weekly chart, I believe this is leg B. So it's improving slowly in the weekly and the monthly. So the XRT that has Groupon, Gap stores. Oh, I wonder what Gap stores, GPS. I love this. GPS got a heads up on the actual nomenclature GPS because they had this way years ago. So GPS. Oh, I thought I'd notated Gap in leg C in the daily in the 2548. Yep. So this is a leg C, maybe a peak C in the monthly. The weekly chart. Monthly is improving. It's at peak B. Trying to go for a C. It really is not a great looking chart, but it's one of the better looking retails. It's A, B, C, probably D, E. in the daily, and that's the reason why I'm becoming cautious. There are just so many. So I said that to subscribers that FEY, we don't have a position in FEY, which is FireEye, needed a leg. It needed a leg D. It's probably going to do that today, and it did it today. Schwab, which has been lagging, needed a leg D, SCHW. And it's just missing by a penny so far, going to a leg D in the daily. I think we're very close to some kind of pullback. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Don't forget, Steve coming up straight after this. So quickly, let me show you. I was asked about CF. CF, is that a phone? Yep, can't get the phone. CF, you see this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, about a 13-bar trading range in a rectangle formation. Keep your eye on this left chart. That's the daily chart. Let me expand a little bit right there. Now, keep your eye on that. Here we go. Keep your eye on that left chart. That's the daily. Look what's happening. Isn't that very similar? Sideways move took a much longer time. Just nicked the rectangle support, and then bam, from peak C it goes to a D. Let's go back to CF one more time. That was a peak B, and that should try for a leg C to the upside, and that would be above. It doesn't have to go very much further because 36.22 is very strong 200 period resistance in the weekly. So I think you can go just above 36.51, pull back, and then maybe make a D and then pull back. You don't have to in a retracement mode, but you are at a peak D in the weekly chart. And that says the daily is the buy mode is more legitimate. So I said, yes, you could start a small position right here, 35.47. In this case, you need to give it about a 33.50 to 33 stop on a small position. I think that's reasonable. I don't think it's going to get there right now. So yes, and then it should push over the previous peak. Next question was HIMX. HIMX, which is HIMAX something or other. HIMAX Technologies. I looked at it the other day. I said it needs to break above the trend line resistance. It's at 10.91. That resistance is at 11.97. So it needs to break above this trend line, which it did, and it's got to use it as support, which it's doing. But my thinking here is that it's the same pattern we've been looking at, except this time it did not break above that in this move. So I'm going to say to you, if you're long, and I think the person's long, I would keep holding the long position. But if it closes under 10.50, I'd take something off and I'd say, you know what, it needs a little more time. Or you you have to be prepared that it's going to take a little more time. Might have to test the 10s. So the Dow is up 70. We are remaining long right now. I've got 1 foot on the accelerator, 1 foot on the brake. Why? Because the Dow achieved in a spectacular fashion, not just a modest move, a leg D, and it extended to today. So that says that the strength is still intrinsic to the 95% in the stochastic and the MACD. I don't want to be early here, so this is still good. I'll be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.